Hey, what is up, everyone? It is Saturday, March 13th, 2021, 10:15 p.m. And I hope everybody's doing great and had a good week. And I know I was absent the last week or so, just a lot going on. But what I figured I'd do is just kind of continue along the theme, and we'll do a little bit of a retrospective look this week from this past week about some of the setups using what we've been talking about here, which is the two-line MACD and 200 period exponential moving average, which is this brown line. This white line is a 600 period, which I might touch on a little bit. Definitely not needed for this. Um, but it's something else you can add onto your chart, especially on the shorter time frames to kind of get an idea where the larger trend is, even beyond the 200. But you don't need it, so probably not going to talk about it in terms of trade setups. It's just simply a good long-term trend piece. But anyways, so what we'll do is we're just going to go through some pairs, and we're going to go back and look. And we started the week this week, March 8th. And so let's just throw a little line on on this chart. So this is an exotic pair, guys. This is the Euro Norwegian Krona, the Euro NOK. And not a lot of people trade these pairs, and quite frankly, I don't trade them a lot either, but I do look at them because sometimes you do get some good setups. But people kind of shy away from these pairs because there can be a lot of volatility with these pairs because there's not a lot of people that trade them, so you can get some real wild swings. You can get a lot of liquidity drains, where the spread really spikes high. And if you are, these are the type of pairs where you have to be very good at your stop loss placement, and definitely do not place it too close to your price, to your entry, because more than likely it'll be hit. If you're trading on, short time frames, really, the hourly chart or under. Okay, but they're not bad pairs to trade. Like I said, people just tend to shy away from them because they're just not, common. It's definitely considered an exotic pair. There's a couple of them like this. There's actually three that I follow. And you also can't be taken in by looking at the spread, because you'll see spreads on these pairs like 35, 40, 45, and you're like, oh my God, 45 pip spread. But the pip value is very small on these. It's in US dollars, a pip is about 30 cents. So it's really all relative. So don't get chased away by the spread, because like I said, if you use a pip calculator, you'll see it's a very small pip value. But that's why you see these, average daily range, 1,040 pips, because, on a kind of a mainstream pair, that's probably only equal to, a couple hundred pips, but they still move. So anyway, so enough of that. So this is the Norwegian Krona, and this was the beginning of the week. And you can see we had, depending how aggressive you wanted to be, we had a couple of entries here. So first, again, we go out to the daily time frame. We can see we're definitely in a downtrend on the daily. So ideally, you want to check your daily first and confirm this. This is the most conservative way to use this. Okay, go to the daily, confirm that there is a trend on the daily and that you're not at any key support or resistance at that time, which we're really not. And then you can start looking for your entries on the shorter time frame. And again, in the video I made last week, I recommended using the 30-minute chart to look for entries, just because sometimes on these shallow pullbacks, the MACD, which is going to be your entry signal, if you use even the hourly chart, you might miss an entry just based on this. And we have an example of that right here. So this is the 30-minute chart. Now, price did not get back to the 200, so this is not an ideal entry. Ideally, you like to see price come up, to about the 200 and then get that MACD signal. But you did get one here nonetheless, and this is what I'm talking about, because if we look at this entry, if we look at this on the hourly chart, you can see the crossover signal So price gets back above the 0 line, and then it crosses over and heads back down. This is your entry. But if you go to the 1 hour chart and look at this, it never made it back to the 0 line, so you would have missed this entry, okay? Because again, this is a very shallow pullback. It didn't even make it to the 200. Okay, so that's why I prefer using the 30-minute for entries now instead of the hourly chart, but I won't go any lower than the 30. So, all right, so there was an entry there. Potentially had another one here. Now this one's a little tricky here because what happened is you had this entry, and then price came right back again to this high, and then it went down. And of course, this candle is the closing candle on Friday, so you really have to just ignore this big giant wick here. Because again, this was the market close on Friday. But you had one here, and if you missed that one, then you had another one right here, and then again, price went down. And I do think price will continue down. So, so that's this pair. I want to show you, this is the US dollar Swedish krone. And you can see on this one, first, again, go to the daily, and we're in a downtrend on the daily. However, we have been pushing higher, so this one's a little bit more tricky because you can say, well, is this just a big correction? This in Elliott wave terms in A, B, C, and now we're going to roll over and go back down. But we still are under the 200, so the bias is still to the downside. But if you go to the 30-minute chart and you look at this right here, that's this arrow right here, this blue line. We had a sell signal. Actually, the sell signal came back here. Okay, but you can see price is well above the 200 EMA on this particular entry. So in a conservative way, you would ignore this entry because on the 30-minute price is above the 200, well above it and trending higher, and so this would have been a little bit more risky. So this is a more aggressive entry, where at this crossover you could have taken the short and then put your stop up here, and in this case it would have worked out. But you can see the danger, because if we go back in time a little bit more and we come over to here, we had another sell signal technically, because a sell signal based on the daily chart. Okay, we had a crossover here, price came down and then boom and right back up. More than likely you would have been stopped out of that. This is a pretty big spread, a pretty big stop loss on this pair. Okay, so this is why I say you really ideally want to have price under the 200 or around the 200, very close to it, on the 30-minute as well as on the daily. Okay, and you don't have that here. Okay, now if you want to talk about a little bit safer entry, you could be talking about this one right here. Now it's still above the 200, but it's a lot closer, and we had a sell signal right here, and this probably, let's see, was this actually on Friday? 312 at 12:30. Yeah, so this was early on Friday during the early London session. So where we got this sell signal on Friday. So this one was better because it's a lot closer to the 200, and we did eventually close here below. So we'll see what happens next week. But this is potentially an entry. But I wanted to show you this because again, if you shouldn't just look at the daily and say, okay, well the daily's down, so I'm going to take every crossover signal on the MACD on that 30-minute. No, because this is the danger you run into, that you're going to get a false break, a false signal right here, only to have price continue in the opposite direction. And of course, if you had taken this one, you would have looked like a hero and say, great, fine, but it's a little bit risky. Now there is some divergence here too, and I'm not going to get into divergence, but you can see price went up, made a new high, but the oscillator did not. Okay, so you had this new high. So at this high, this would have been a safer place to take this short. Okay, so if you're going to use divergence, this could have been a good trade. But again, it's still is a little bit more risky because it's above the 200. And sometimes just because there's divergence doesn't mean price is going to turn on at that high. Divergence sometimes can be very early, where you'll get this divergence, and for a period of time, price will continue to move in that direction before it actually turns back around. So it's still a little bit risky either way. Okay, but based on the divergence, obviously in hindsight, this looks good. But again, ideally, you want price on the 30-minute chart to line up with where price is on the daily chart as well. Okay. Okay, so hopefully that's clear. So let's just go on. Worth it. Okay, so here we are on the, and you can see how much cleaner a chart like this looks. This is the pound yen. And of course, daily is clearly in an uptrend. So if we go to the 30-minute, we look for entries, you know, through the 8th. So we go back to the beginning of the week. So let's just say right about, this was about the beginning of the week right here. So we had a buy entry right here. Okay, price dips below. All right, and there's your buy signal right here. Again, didn't come back to the 200, but that's okay. We're above the 200, and we know we're in an uptrend on the daily. Okay. And we theoretically had another entry right here. This was probably on Friday as well. Yes, this was on Friday. This was a couple hours into the London session. And so, and again, I know you have this red candle, but this is the close. So I would expect this is going to continue up. But this was the entry. If you're not already in this, probably a little bit late, unless at the open tomorrow price gaps down a little bit, then that might be a good time to get in long if this gaps down. But if it gaps up, I would just let it go. So, but if we get an open to the downside, then that might be a good value area to consider getting in on this long if you miss this opportunity. Okay. Pound Kiwi, sideways price action again. Just forget this. This is just not even worth it. So forget about pound Kiwi. I would say forget about pound US dollar. Same thing. Sideways price action. Very choppy. I mean, just compare this chart to this chart. Okay, you can just see the difference. Okay. All right. So, all right, pound Swiss. So I actually did take a little long on pound Swiss on this signal, and I got out pretty much at the top, and I exited. And you can see what price is doing if we go out to the daily. Well, the daily's a little long. If we go to the 4 hour or the 1 hour, you can see we just keep hitting this resistance zone right here. Hit it 1, 2, 3, 4 times. Okay, and you can see we have this tightening price range right here too. All right, so you know there's going to be a breakout out of this thing eventually. You know, whether it rolls over and breaks down or continues back up, I don't know. But I did take a long. It was a little bit late because this probably happened during the London session when I was sleeping. I probably caught it late, but here was the signal, and I got in up here and I exited here. So you know I pulled a few pips out. But as you can see right now, I have no interest in trading this because now we're just completely moving sideways. The moving average is starting to flatten out, and we have this. We're definitely in this wedge pattern right here. So I will be watching this pair for a breakout, but I have no interest in taking any additional trades on it. Okay. Canadian yen. This is another pair that's been screaming to the upside lately. And again, for this past week. If we say about this was the beginning of the week, somewhere in here, here was your entry for the. This was your entry for the week right here. This was it. If you had gotten in right here, let's say ideally, and you were holding this all the way through, you'd be up 150 pips through the week. Okay, there was another entry right here, so this was your another chance to get in on this same move. So either here or here. Okay, but right now there is no trade entry on this pair right now. 30-minute CAD Swiss, again, daily in a remarkable uptrend. And again, this is very much like the CAD Yen entry here for the week. This was your perfect spot, right back to the 200. Okay, crossover here, boom. Okay, and then if you missed that, there was a little bit later entry right here. Again, back to the 200, retest, right, up, back, retest, and then it went. Okay, those are your two entries. There's no entry right now. But there's no trade there right now. All right, dollar Swiss. So dollar Swiss is a little bit interesting. So here we are. Again, daily chart is up. Daily chart is up. Okay, but we did was this last week or the week before, we broke above the 200 here, so it turned up. And now if we go down to the hourly chart, now the hourly chart here is actually the best view of this. You can see we had this nice little correction here, A, B, C, right back to the 200. Okay, so now this is one where you would have gotten a false signal and you probably would have been stopped out right here because you took this crossover right here. Now it depends where you put your stop. If you had gone long right here and you'd put your stop just below the swing, you would have been taken out. In this case, it did end up coming back to the 200, and this was the real entry right here. And I do expect that this will continue to the upside next week. But this was the real entry. Now let's look at that on the 30-minute. Okay, so here's that entry on the 30-minute, and again, looks like a pretty good entry, right? Right back to the 200 crossover, but no, it continued down. Now I'm going to just say this from an Elliott wave standpoint. This is pretty obvious. This is an A, B, C correction, and then up. There's probably, A. You got 5 waves for A, basically. Probably 1, 2, 3, 4, 5. There's your A, B, C, or A, B, C up for B, and then 1, 2, 3, 4, 5 for C. And then your uptrend continues. So if you're an Elliott wave trader, you probably would not have been fooled by this entry. But if you're just trading strictly off of this particular method, you may have gotten fooled on this one, thinking that this was the turn right here and then it continued down. So again, which is why I mentioned at the beginning, again, ideally, the things that you want to have line up is have the daily agree with the 30-minute, and you want to have that price pull all the way back to the 200, and those are your ideal entries. But sometimes you're not going to get them, and this is the risk you take if you take one of these when it's not against the 200. You take this risk that this is a false break and price continues down, okay, only to see it eventually move back in your favor. Now, of course, even if you did get stopped out here, it would have been hopefully a small, if you got in here, put your stop here, that's a small stop, no big deal. When you see price come down, hit the 200, hopefully you get back on the horse and re-enter here, and you'd be okay. All right, but that's kind of the risk that you take. So just do a couple more. So here's one you want to avoid: Euro Kiwi. Okay, a complete disaster. Okay, 30-minute chart, just sideways. Now, you cannot make heads or tail of this. The daily chart is still down on the daily chart, but you can see all these candles, these daily candles, just all crushed together here, which is what this mess is on the 30-minute. Okay, so would avoid the Euro Kiwi, and let's see what else. Kiwi Yen, same thing. Okay, and last one we'll look at here is the Euro Yen. Again, a daily chart, clearly in an uptrend, so we drop to the 30-minute, and we'll put a line here. Here's the market open. You can see this weird looking candle. That was the market open on Sunday, and here's an entry right here, and then there's another one right here, and then there was another one right here. Okay, all of this, would price above the 200 and clearly in an uptrend on the daily chart. Okay, so there were your entries on the 30-minute. Okay, so again, guys, that's what you kind of want to do. If you want to trade this the most conservative way, just go through your pairs, whichever ones you do. Look for a nice clean trend on the daily chart, not sideways. You want that moving average either sloping up in an uptrend or a nice downslope in a downtrend. And then once you confirm that, and you also know that you're not bumping up against a major area of support or resistance on the daily chart, then go down to your 30 and just wait for those pullbacks. You want in an uptrend, you want price to pull back to the 0 line or preferably below it, but if it just touches the 0 line, that's okay too. Or if it goes below, and then as soon as you see that cross back to the upside, that's technically your entry. Okay, and then just put your stop just below that swing, or maybe one swing away, just to give it a little breathing room in case it comes back and try to retest. So if you got in here, maybe instead of putting your stop right here, you put it over at this one, right? Just in case, this price rolled over and came back down and retested this low, you may have gotten stopped out instead of holding on for the next push up. Okay? So, yeah, so that's it, guys. I'm not going to, at this time, I'm not going to look at, ahead for next week, because I really want you guys to go through your own charts and just do exactly what I just did, and see if you can spot the trades that already happened, and then go through and look ahead for what you might see early next week, and write them down. Write down the ones that could be trades early in the week, even if they haven't completely set up yet. Maybe the entry hasn't happened yet, but it looks like it's close. Like price is in an uptrend. Maybe you're seeing the MACD moving down, but it hasn't quite gotten to the zero line yet. Just put that on your watch list and just keep an eye on it at the beginning of the week and see if it pushes down. And then, when it starts to turn back up, then that's an entry. So, all right, but you can get some really quality entries here. It's really about, good risk management and good stop loss placement, as you saw on a couple of mine. I had some really good ones, but I had a couple where, I probably just didn't have a lot of confidence for various reasons, and so that's part of the trading psychology piece. But the setups are there, and they're pretty obvious most of the time. As long as you've got a good trending market, you don't have sideways price action on the 30-minute or on the daily, and you're not at a key support or resistance level on the daily, then go for it. If you get stopped out, you get stopped out. That's the cost of trading. If you're practicing good money management, stop outs really shouldn't bother you. Take them as learning lessons. They're going to happen. There's absolutely no trading system where you're not going to have losses. And if you do say that, well, I got 90% wins, then chances are you're taking very tiny, small bites out of the market, and you're not letting your winners run, and that's going to lead to disaster, even with a high win rate. So, all right, so I hope that helps, guys. Comments, questions, concerns, of course, leave them down below in the comments. Please hit the like button, helps with the YouTube algorithm, and hit subscribe if you're just finding the channel for the first time. And if you have a setup you're looking at for next week, or even something in the past you want me to look at, just leave it in the comments, and I will take a look and respond back and let you know what I think. All right, so that's it, guys. Have a good rest of your weekend, and I will talk to you this coming week. All right, thanks.